Hi guys, welcome to another honeystocks.com weekend analysis for the 4th of January 2019. Now, for those of you that have been following me on social media, you all know that I'm currently working out of Tokyo, Japan at the moment. I made the decision really last minute to go from, Whistler. I was learning snowboarding just before Christmas, and I decided that I really wanted to see what Japan looked like over the Christmas New Year period, and I've been absolutely blown away by the country, the people, the culture, the nightlife. Everything about Tokyo, Japan is utterly incredible. So if you've never been here, I would highly, highly recommend it. It's just a beautiful, beautiful place, and if you want to kind of see a few of the pictures, I'm sure you could go onto my social media and have a little look. But as always, I have around 20 charts for you to consider for the forthcoming week. And I know that a lot of us really enjoy the break over the Christmas and New Year period. Obviously, it's a low volume environment, and yeah, it's been a welcome couple of weeks break for me, and I'm ready and raring to go and to have another incredible year, and hopefully you guys are too. So yeah, let's get into the charts. Let's see what the charts are telling us at the moment. And if anybody has any questions, any thoughts, any comments, if there's any charts that you want me to look at maybe in a couple of weeks' time, then feel free to comment below. Definitely give the video a like. It all helps with YouTube algorithms. And yeah, let's dive into the charts. Now, before I get into the charts, please, as always, just make sure you're comfortable with that before proceeding any further. As I said just a second ago, I know nothing. The interpretation of the data is all on you. There's no investment advice and all that good, boring stuff. Now, if this is the first time that you've maybe come across my work, I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment. Technical analysis is what I'm widely known for. I think the one thing that's apparent, especially from the emails, the messages that I receive on a daily basis, a lot of you struggle to identify strength in the market. So hopefully you get a lot of insight from this. Now, this is the Fear and Greed Index, where I just really want to kind of start off. Now, this is actually updated, and we've got the Fear and Greed Index up at 96 at the moment. Now, what that is essentially saying, that's just giving us a sentiment of the market, and that's actually just telling us that we are due a little bit of a pullback in the marketplace. A lot of you will be shouting from the rooftops and saying, the Fear and Greed Index is made up, but it is a sentiment tool that we can use, and a lot of professionals use it. Now, as I said a second ago, feel free to subscribe to our channel. At the end of today's video, if you are somebody that is struggling a little bit, feel free to stick around for a couple of minutes at the end, and I will walk you through our New Year offer. It does seem like I've got an offer going on every other week at the moment, just with Black Friday, Christmas, New Year, but this will be the last offer for quite some time. But the charts, that's why you're all here. So where I really want to just start off is with the relative comparison graph. Now, if we think about the S&P 500 as the benchmark for the overall market, what our job as technical analysts, traders, investors, etc., is to identify the areas of the market that are likely to generate the biggest returns in the shortest space of time. And over the course of the last 12 months, we've wanted to be exposed to semiconductors, tech, payment processing companies like MasterCard, Visa. Those are areas of the market that you would want to be if you want to outperform the market. Now, talking about the overall market for just a second, I know judging from the messages this week, just with regards the whole Iran Trump thing, you have to understand, guys, that for me, I don't really care what the news event is. I look at the market on a technical perspective. So the news event for me is completely immaterial. And the reason for that is it just helps me to step back and just assess things objectively. A lot of you that have followed me for so long already understand this. And I think that's maybe why my work is so highly thought of, is because I have an ability to step back and just look at everything completely objectively. I try to remove as much confirmation bias as possible. Sometimes I would absolutely accept I'm human just as much as you guys. I am still working on the confirmation bias side of things, where I do try to remove as much of it as possible. And charts like this help, because when we understand that when the market reaches overbought conditions, we do see these pullbacks. Now this is a chart that I've talked about over the last few weeks. We are still in a bullish phase of the market. I'm not saying that we're going to get a correction. I'm not saying that we're going to get a massive pullback imminently. But what it does help me to do is just to manage risk appropriately. And that's the key word, manage risk. I'm expecting, or it wouldn't be a surprise to me if we get a pullback in the market. And by not being blindsided, it helps me to just navigate the market with a little bit more safety, in my opinion. And when we look at the individual charts and where we should be focusing our attention at the moment, we've got a lot of individual candidates that I think should be on the radar. Now, some of these stocks are faster moving than others. It will all come down to your own risk tolerance. If you're one of these guys that likes to jump in on Tesla, I'm assuming that you're comfortable with the risk of being in Tesla entails, whereas if you're somebody that prefers the slow and steady Starbucks of the world, like me, this is my typical chart. These are stocks that I like to buy, and I think we've got a logical 14% upside there with Starbucks. My guy's got a trade alert on this, initially down at 81, 82. It's motoring, and yeah, it's got a logical 14% upside. Okta is clinging on to the 200-day simple moving average. There are some bullish signs that I'm seeing at the moment with the cloud-based tech stocks. I think we can look at AYX as another example. Again, it looks like it's reclaimed the 200 SMA, which is a good thing for those of you that are bag holding this and maybe you bought in a little bit too high. So the expectation is that this should now go and test 115, provided the overall market doesn't have that pullback that I was talking about just a second ago. But I think given that we've had adverse news events, but we've seen the cloud-based tech stocks climb over the last couple of days, you know, absolutely that's not a bearish signal for the cloud-based software stocks. Twilio, again, this is the level. I think I would be tempted to maybe buy in here on a break above this 105. I think initially the 100 level was the level for me, but I've kind of reevaluated the chart a little bit, and for me I want to just see this level clear, and I think there's a fair chance of that one moving. Thank you to everybody that's reached out to me over the last few weeks, just thanking me for providing this chart. For those of you that don't know, for you guys on social media, all my free content, I suppose, I highlighted this breakout as one that you might want to consider, and it's been a huge winner for many of you. Super happy to see that. I think this kind of makes a lot of sense to me. I think just, you know, being aware of where you might want to reevaluate your position, I think around $90 it does seem pretty logical. Potentially 95, but I think for me, just keeping it simple, not overcomplicating it, not getting too greedy. I think $90 makes a lot of sense. Roku, again, I think we can be bullish above this level around 125. Again, we've obviously had a good bounce over the last few days. Long may it continue. Again, those of you in Roku, I'm assuming you're all comfortable with the risks of being in Roku. Obviously, huge momentum stock, very, very volatile, very up and down. It's not a chart for me, but doesn't mean that you can't play it technically. I think above this level makes a lot of sense. Amazon, again, we finally got that breakout above the 200 MA, and obviously the momentum flew in. We got a little bit of a retest, and it looks like it's off and running again. You know, I think my stance is still the same. I've been preaching this for the last month. You know, the stock market is not going to go and create new highs and leave Amazon behind. Amazon has got to participate in the move. And I would fully expect this now to go on and test the $2,000 level again, at which point I would reevaluate things. Cisco Systems, I think we are looking like it wants to break out. The chart is starting to look a little bit ropey. One of you was asking me about this after the last analysis that I did before Christmas. So yeah, I think this is a level of interest. Is that a chart I would look to trade? Probably not, but you know, the technicals can be played. NVCR is showing a little bit of distress at the moment. I think my thesis on this one was that we're obviously in a triangle pattern, and a breakout of either level, it might be appealing to those of you that maybe want to buy the stock or maybe short it, take puts. But I think at the moment, I think those of you in there might want to just kind of pay attention to this. I think if you're technical on it, then I think that is the level to watch. I think technically you can probably say you're still bullish above this level, but I just wouldn't want to be bag holding and you know, taking any chances on a substantial move lower here. I think there's an opportunity or a chance that this comes down and tests the $68 level. But yeah, I think NVCR for me it's no longer appealing. I want to be buying stocks in uptrends in a bullish market. I'm not looking to short stocks. There's a very real chance that you just have your head ripped off just by shorting stocks in a bull market. It's a fool's game. That would be my message. Home Depot, again, I would just say we're bullish above the 200 SMA. There was a chap social media a couple of weeks ago that highlighted this. Completely, I agreed. It was a valid chart. It does look like we've got a little bit of resistance. You could look at this as a breakdown followed by a retest, but I think given, you know, it's Home Depot, I think we just say we're bullish above the 200 SMA, which is rising. I think ultimately, hopefully we go and retest the levels at around 240 there. CYBR, again, we're in a sideways range at the moment, guys. I think this is the level to pay attention to. I think, you know, one of my clients is actually in this one, and I provided this chart to him just to say, look, this is the chart. You know, this is where I would say the line in the sand is. We've got the bounce, obviously. This is a key support level. So hopefully this starts to advance and moves higher. Caterpillar, again, for those of you that don't know, my guy's got a trade alert on Caterpillar around 135, 136. And we're obviously up at 148. We're still in a bullish phase. We're looking like we're getting a bit of a breakout here. So yeah, I think above 150. I think those of you in there, I think you could probably expect it to maybe move towards 160. You get a move above 160, I think it goes to 173. But that's what a plan for a trade looks like. You should never have anything that's impulsive. You should always map out your trades, map out the reevaluation points, and kind of just go from there. Estee Lauder is flirting with breaking out. Very simple chart, guys. One line, that's all we need. I think we can say that we're probably bullish above 200 here. I would obviously like to see this hold, but it does look like we've got a bit of a battle here between the bulls and the bears. I think for me to buy this, I would want a substantial move with volume and momentum to come in on Estee Lauder. Square Inc is in a sideways mess, guys. Okay, I'm constantly asked about this one. Look at the chart. I don't really see what's massively appealing at the moment. The only way that I'd maybe consider something here is if we got a breakout above this level, 18% upside. But yeah, sometimes trends just end. Many of you are married to the stock because of this. This is a stock that was incredibly kind to myself, many of my subscribers, clients, 18 months ago. But yeah, you just let it go sometimes, and a lot of you that are holding on to these types of stocks are in very real danger of just watching a bull market pass you by, and that would be the concern. Activision Blizzard, I think, makes a lot of sense here above $56, $57 I should say. I think there's a good amount of upside there with Activision Blizzard. I think Avalara, I highlighted this one in my last analysis, and I know that this is a breakout that some of my subscribers and clients have jumped in on. I think for me though, I think this is the level above $80. It makes a lot of sense. Etsy, again, potential double bottom pattern here. It's going to be very interesting to see if this level holds and whether we're going to close this gap. Obviously, we can see that we've got rising momentum. With it being a low volume period in the market, I mean, this is perfectly acceptable at the moment, but given that I would expect Wall Street to be back to normal from Monday, it'll be interesting to see what happens with the volume there. Salesforce looks like it's wanting to test and potentially break out. I think for those of you that are maybe looking at this, I think that's probably the level there. I think you would probably want to consider Salesforce, I think, on a move above that level. Sorry, I like to just kind of build analysis when I need to do something. So Sony Corp, I think we've had a bit of a pullback this week in Sony. Now again, this is a chart that I sent out to my guys a while ago, and it's off and running now. I would fully expect this, provided the market plays ball, provided, I think, when earnings comes up, as long as there's nothing really negative of it, I think we can fully expect this one to start to move towards 85. But again, I would just be managing the risk and waiting to see what happens there. Twitter, I think those of you that are buying in at the moment, I think there's a couple of things that are concerning a little bit. I think given that this is showing itself to be key resistance again, I think you really do need to wait for a breakout above this level to consider buying in. It's just not doing anything at the moment, guys. I know many of you like Twitter, but yeah, I think from a technical perspective, it's very, very difficult to justify the case at the moment. You fundamental guys, I get it, but fundamentals are not necessarily my chosen method for decision making. Again, Facebook, it does look like it's meeting a little bit of resistance here. I think if we can get a breakout here above 210, I think there's only a logical 5% upside, so I don't see where there's maybe a risk to reward proposition, if I'm being completely open with you. So I think for those of you that are maybe looking to buy Facebook, I probably want to see a move into all-time highs, and before a lot of you are saying, why would you buy a stock when it's at its highest point? when stocks create new highs, they go on to create further highs, and that's how uptrends work. So yeah, Facebook, I think above 220 makes a lot of sense. Again, one or two of you got in on this triangle move after my analysis a couple of weeks ago. Again, thanks for the kind words. I think this level, I think those of you that are maybe looking for exposure to the cloud tech, I think above 160 would make a lot of sense there. MasterCard stance is still the same, guys. I think above $300 is where you want to be. Got to be bullish on MasterCard at the moment. Target, not so much. I wanted to highlight this one. We've got declining momentum here. We've obviously seen a bit of a sharp drop. Now, when we have a divergence can oftentimes just be a short-term counter trend move, but sometimes we get horror stories. And for those of you out there with positions in Target, maybe you're in a lot of profit at the moment. I wouldn't want to take any chances in case we get a horror story. Declining momentum in divergence is not a bullish signal. So yeah, if you're out there in Target, just be a little bit careful at the moment. ZTS, I think we can be bullish. I think above 130 here makes a lot of sense. But I would ask you to kind of do a little bit of due diligence on that one. Tesla, what can I say about Tesla? It looks like we're getting a bit of a short squeeze at the moment. I think $500 makes a lot of sense to just kind of keep an eye on that level, see what happens. There's no doubt about it, we're obviously massively overbought at the moment, but a lot of you Tesla bulls are obviously comfortable with risk. A lot of you see this flying towards $1,000. I can't argue with any of you. I love Elon just as much as the next guy. The stock, though, you really need a strong stomach to be able to hold this one, unless you've completely bought into the company and the fundamentals. I get it, but on a technical level, very, very stressful stock. One of my guys is doing ridiculously well on Tesla at the moment. Stock and options, and yeah, long may the bull ride continue. Blackstone Group is another one. I think this is one where you might want to consider above $57. Again, as we move through these key levels, we can expect it to start to move towards the next level. So yeah, I think Blackstone makes a lot of sense at the moment. PayPal, again, slow and steady sometimes wins the race. Not too exciting, but it does look like we're threatening a breakout, and I think if we can see the momentum come in next week, then I would expect PayPal to close the gap towards 120 in pretty short order. Breakout in gold, guys. Now, again, for those of you that aren't aware, and I'll go over it in just a second, but gold is a chart that I posted to my subscribers and clients last year on this breakout, and I think given that gold is breaking out again and we've got that 16% upside, we can start to look to other areas. We don't need to buy gold, we can look to the gold ETFs. Now, I was saying to my subscribers this week that I'm not one of these guys that's recommending, or I would never say to you to go into these highly leveraged 3 times ETFs. I think that can be a very foolish game sometimes. But if you want to look to areas of gold for a bit of exposure, or maybe GDX, GDXJ, Kirkland Lake, Barrick Gold Company, you could look to these areas. You don't need to buy the underlying precious metals. So we would thoroughly urge you to do a little bit of due diligence on gold at the moment, because if we do get declines in the market, the broader equities market, then we can look to see defensive areas start to advance, and areas like gold, etc., can oftentimes be the areas to focus attention. So hopefully you guys have all got a bit more insight into what to be looking at for next week. Now, as I touched on at the start, um, we've got our New Year's offer. So maybe you're out there and you're just looking for a fresh start. You want a fresh perspective to your decision making. Maybe you want to have access to charting. Maybe you've got a family life, career, business, and you don't have the time to do the research on all the stocks. Then you might find that we can do something to help you out here. Obviously, for $500, it's a bit of a no-brainer in my opinion. You also at the moment are getting access to our technical analysis program, which most of you know that we charge a lot of money for. We provide bespoke charting requests. If you need a second opinion on a chart, I'm happy to provide mine. We provide access to an incredible trading community full of beautiful people, just super helpful. You get 1 year access to our premium weekend charting analysis. What you're watching at the moment is my free generic social media analysis that will have a few charts that are going to be actionable for next week. But I also have my premium charting analysis for my clients and subscribers, which has usually anywhere between 10 to 15 actionable ideas for the forthcoming week. And naturally you'll also get access to our trading ideas and scans. I'm going to just touch on the trade ideas in just a second, but like I said at the start, I'm Sam, and obviously, as I said, I'm registered with the CMT Association and going through my exams at the moment. I also run honeystocks.com trading school, super popular website. A lot of the biggest names in finance follow my work, which is obviously a bit of a feather in the cap, and my work is highly thought of. And this is one of the reasons for that is I open up my work with a level of transparency that I've never seen from anyone. Now, I publish the full list. I've done it for 2018, I've done it for 2019. Every single trade alert that I've posted to my groups, my subscribers, my one-to-one clients, I publish them all on my website. I've obviously got a code of ethics that I need to follow with the CMT Association, and I publish the date, the stock, the price that I've recommended it, and what that stock has then gone on to do. And like I said, I'll never say to anybody that you're going to come in and make 800%, by joining our group. Definitely not. You cannot initiate positions in every single stock. 2018, I think there was 1400%. But what this should hopefully do is just give you an idea of the types of companies that I'm recommending, because a lot of you are maybe looking at stocks and you're maybe looking at $5-10 stocks, etc. My group isn't going to be for you. But if you're somebody out there maybe with a little bit of capital behind you, and you want to have an educated approach to the market, and you maybe want better consistency, you want to work with a bit more logic, and maybe you want to just learn the technical side of the game, we can probably help in some way. These are what my trade alerts look like. This is a stock. This is obviously the trade alert that I sent out for Nike, and we're up at 101, 102 now. We've got Starbucks here, right, like I said at the start, $81. Bespoke charting requests. This is ARWR, a chart I provided one of my clients, helped him stay in the trade, and this is up at $65 and life-changing stock. We've got Enphase Energy, again, this is $117. We're up at 29 now, and that's in the space of a couple of months. This is what I do, guys. Charting is my life, and I provide as much support with my charting as I possibly can, just to help my subscribers and my clients just make better informed decisions. I'm obviously not responsible for anybody's wins and losses, etc. The charting is there, and it helps. So if you're out there and you are trying to maybe fit trading around a career, business, family, maybe you're trying to get away from day trading, maybe you want better consistency, maybe you want to learn this stuff for yourself and not just follow others, maybe you want less stress, we can probably help a little bit, because there's nothing worse than hunting around YouTube and learning from those losses. The average journey for a trader, it could be a couple of years, and you're learning from losses and trying to filter out all the noise from YouTube, trying to learn the technical side of things. We can help you do it in just a few weeks. So if you're somebody out there that would like to learn a new way, please feel free to jump onto our website. There's going to be a link for you below to register your interest in joining our subscription, joining our community, and maybe we'll speak to you along the way. But if you've stuck around to the end, from the bottom of my heart, thank you very much for watching. I'm going to go and enjoy Tokyo for the weekend, so thanks again. Bye.